Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, April the 3rd at about 2:15 p.m. Eastern. Well, the monthly employment report issued this morning by the Labor Department reported that U.S. economy shed 701,000 jobs in March, abruptly ending a historic 113 straight months of employment growth, as stringent measures to control the coronavirus outbreak shuttered businesses and factories across the country. And on that note, let's go in and let's look at three charts that could give us a little insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. As you all know, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, when I captured this chart today, the SPY was trading at $245.72, about $24.57 on the S&P 500 itself. Now, we know that our all-time closing high was way back up at $338.34 on February 19th, back up here. So since then, the SPY has fallen all the way down to $218, then has moved back up about 17%, and then today is currently trading at 26% off those all-time highs, and that means it's in bear market territory. So we can see here that the SPY is trading below its 20-day moving average. That's the red line you see on this screen. Of course, above we have the 50-day moving average in green and the 200-day moving average in blue. Now, the SPY did fall down to this very important low here at $218 on March the 23rd. Then it rallied up, as I said, rallied up to highs here early this week at about $263 or about $630 on the S&P 500 itself. But if you'll note here, for actually Friday, Monday, Tuesday, Wednesday, it could not get over $263 and move higher. So all it could do then was gap down as it did this in about the middle of this week. It's held these lows here at $244. It's held these lows so far, and we really need it to hold these lows, because if it breaks this support level right here, then it's logical that it could start yet another leg down. Now, how long that leg will be is anybody's guess. And it may even fall below it today, because again, at $245.72 right now, and the support low is at $244. So if it does fall below that $244 level, then we could see it head back down toward $218. Now, the question is, does it retrace that entire move up? Do the weak hands come in and start selling, and does it go all the way back down to this low at 218 or 2180 on the S&P and go below it, or are buyers going to come in before that happens, or at least when and if it happens, and hold this market up? And of course, all that remains to be seen. And of course, the news coming out every day, whether positive or negative, is affecting the market in a pretty big way. Of course, today we also know that it's Friday, and a lot of people, a lot of market players don't want to hold a lot of positions through the weekend. Now, remember, the reason we follow the SPY is because when the S&P 500 heads higher, when we're in a bull market, 3 out of 5 stocks will follow the S&P 500 higher. When the market's ornery and cranky like it is now, 4 out of 5 stocks will follow the S&P 500 lower. So the reason we keep such a close eye on the SPY is because it gives us, in its own way, it's a crystal ball as to what the stocks we're potentially looking at to buy or sell. It's a kind of a crystal ball as to which way they may go. There is definitely an influence there. So in the coming week, I suspect we're going to see more volatility. We're not out of this yet as we move through April. Hopefully May brings us a little bit of calm. For now, though, I'm watching this 218 level on the SPY to see if it can hold here. Now, if it could possibly even trade in a range, it's a very wide range, but even trade in a range between 218 and up here at 260, 263, that would be something. But holding these lows will be important. Of course, if that doesn't happen, we'll have to get more conservative. So at some point here in the next month or two, I think we will be able to start doing a little conservative bottom fishing. Certainly that's what I intend to do, hopefully sooner than later. Our next chart today is a chart of the NASDAQ 100 ETF, the Invesco QQQ, symbol QQQ. As you all know, the QQQ represents, again, the NASDAQ 100, very important index in the market, and certainly contains many of the big momentum stocks that are market leaders, such as Apple, Amazon, Facebook, Netflix, that whole group. Today, the QQQ, as I captured it here, it's trading at $181.79. It is 23% off its February 19th all-time high back here at $236.98. So at 23%, of course, we're above the 20% mark off all-time highs, which indicates a bear market. So at 23%, we're still in a bear market here. Like the SPY, the QQQ is trading below, at least today it is, its falling 20-day moving average. We have near-term support here at $181. Now on March 21st here, the QQQ, actually it was right over here, it hit a relative low, hitting $164.93. We'll call it 165. Now because so many of these candles, their lows are here on this line, I'm calling the support low here at about $169. So I'm watching that as the low that we would like, certainly, the QQQ to stay above and not penetrate here. So and also the QQQ rose up here to these highs it could not get through. Similar to the SPY, same pattern at 193. So now we have resistance here at 193. If this area right here can't hold, we'll have more resistance at about 186 if the QQQs start falling here. So just like the SPY, we're going to see if it can somehow create a base here. We definitely want it to stay above $169. So maybe there could be a bumpy bottom here. I would hope if that doesn't work out, then 169 will be the level I'm watching as a key support level for the QQQ. I will be watching for new opportunities, absolutely. But I'm certainly not rushing into anything. Remember, lost opportunities are a whole lot less expensive than lost money. Okay, let's go on now and look at our final chart today. It's the iShares US Pharmaceutical ETF, the IHE, talking about maybe starting to nibble a little bit. The IHE has 44 holdings in it. They are US pharmaceutical companies. The top holdings are Johnson & Johnson, Merck, Bristol Myers, Pfizer, and Allergan. This is a pharmaceutical and biotechnology, a U.S., I should say, pharmaceutical and biotechnology exchange-traded fund. Now, when I captured the chart today, it was trading at $130.62 right here. Actually, at this moment, just a little bit above its 20-day moving average. Now, you can't see it on this screen, but the IHE made an all-time high in July of 2015 at $184.63. So I calculated, and the IHE is now 28% off of those highs. So again, in bear market territory. Now, it did make a recent high back here in January. that we can look at about $164. We can actually see a head and shoulders top here, a shallow one, but it played out for sure. And then the IHE moved down pretty rapidly. Of course, we're looking to our pharmaceutical companies, indeed all over the globe, to create and develop vaccines and possibly even cures for the coronavirus. So I think this is one area in the market, one sector that could possibly bounce dramatically if something good happens. I'm not basing my trades, I will base my trade size on the technicals of this chart, certainly, but it's one thing to hold in mind. And certainly this may not be a time that you feel you want to get into anything, but I thought I'd bring this to your attention. I am going to watch the IHE going into next week. There's 3 support levels that I'm watching here now. We want to know that resistance comes in here at about 137. 138. So we know that resistance is there. The IHE couldn't get over it this week. It like most, it fell back down. What I'm watching here are support levels here at 128. I'm watching support level down here at 121 where this red line is, and certainly the low here is worth paying attention to at $115.50. Now, if in the coming week the IHE can remain above, and I'm not going to jump into it real fast, believe me, I'd rather watch it for a few days. If the IHE can remain above $128 here, I may, and the operative word is may, buy a small position. My initial stop is going to be at 121. So if the market starts down and you'd rather wait, I certainly would do that. And any position I buy will be very, very small because I'm not in the mood to take any big losses here. Please know that if the market does a dumpster dive again on negative news, if I'm in this trade, I may exit it early before it reaches my stop at 121. What I'd like to see is for the IHE to of course, form a base here. Now, on the positive side, if the IHE can push above $138 here, I may add more shares to my position. It just depends on what happens, but I will be keeping that position very small. And of course, if I do that early on, I'll turn my stop into a trailing stop. So you may want to keep an eye on the IHE in the coming week. And now, please know that I've temporarily suspended my usual list of next week economic reports. But if you want to see a calendar of those reports, go to toniturner.com, click on Education, and then Economic Reports. So I'd like to talk about this subject here very, very quickly with you all. How is your response ability when it comes to the stock market? Now, we all know that our primary goal, my mantra indeed in the market is to protect my capital at all times. So on that note, think about your response ability. And of course, this works in life as well as the market. In the market right now, is your ability to respond to the current market environment, is it resulting in profits? Now, please know that everyone with long-term positions has lost more or less, depending, money in the market. That goes without saying. But if you're trying to get active in this market and you're kind of jumping in and out, if you're an experienced trader, I hope you're making good profits. If you're new to the markets, though, your response ability may not be what it should be. This is a very difficult market environment. We know that this market can go up several percentage points in the day and then roll over and go down several percentage points. So I want to remind you again that a string of small losses can turn into one big loss. And in this market, it's very easy to get whipsawed. In trader parlance, that means to get whipsawed, maybe you go long and then the market turns against you and you get stopped out. So you say, the heck with it, I'll go short. And then the market starts rising and you get stopped out again. So it's darned if you do, darned if you don't. This market, again, is very, very good at rising sharply and falling sharply in the same day. So please, please, please be careful out there. There is nothing wrong with standing on the sidelines and knowing that cash is a position. And just as a reminder, we are offering How to Bottom Fish Like a Pro, my online training, at a 20% discount. This may be a good time to learn how to bottom fish effectively. Okay, you all, so for next week, until then, please be very, very careful out there. Please try to keep green on your screen. Stay healthy, stay safe. Until next week, this is Toni Turner, and this is The Market Now.